The United States went to war. Inflation is back. The stock market hit record highs. And nobody asked me how I felt about any of this. My name is Theo. I am a Maltipoo. And this is your briefing. Let's start with the big one. February 28th, 2026. The United States and Israel launched a joint military operation against Iran. Iran's supreme leader? Gone. And Iran's response? They fired missiles at U.S. bases across Jordan, the UAE, and Qatar. Now, you might be wondering, Theo, you are a dog. Why do you care about geopolitics? Because oil. You see, there is a little place called the Strait of Hormuz. It is a narrow waterway off the coast of Iran. Every single day, 20 million barrels of oil flow through it. That is 20% of all the oil on Earth. Every single day. When tensions spiked, oil briefly touched $120 a barrel. 120. I want you to sit with that number, because that is not just a number for oil traders in fancy suits. That is your gas bill. That is the cost of shipping your groceries to your store. That is inflation, showing up uninvited, like a squirrel in my backyard. The good news? Ceasefire talks started, oil pulled back closer to $90. The bad news? One tweet, one statement, one escalation, and we are right back to 120. The market is not trading on supply and demand right now. It is trading on vibes, geopolitical vibes. I did not come here to panic you. I came here to prepare you. Keep an eye on energy prices. They are the canary in the coal mine, and I am the canary, obviously. Now, let us talk about inflation and the Federal Reserve and broken promises. At the start of this year, everyone was expecting rate cuts by mid-2026. The experts, the analysts, the people on television with very good hair. They all said, cuts are coming, relief is coming. It is June. There have been 0 cuts. Here's what happened. April CPI. That is the Consumer Price Index, which measures how much more expensive your life is getting, came in at 3.8%, year over year. That is the highest reading since May 2023. Energy alone was responsible for more than 40% of that increase. Gasoline, up 28% year over year. And here is the part that should concern you. Real wages, meaning what your paycheck actually buys, declined. For the first time in 3 years, inflation is outpacing wage growth. Your raise did not keep up with your grocery bill. Consumer sentiment? The University of Michigan's index hit 44.8 in May. That is an all-time low. In a survey that goes back to 1952. Not 2022, not 2008. All-time low. So what is the Fed doing about it? Holding. Rates are sitting at 3.5 to 3.75%, unchanged for 3 consecutive meetings. And the new Fed chair, Kevin Warsh, who replaced Jerome Powell, is not rushing anything. Markets are now pricing in the possibility that we do not just stay here. We might actually need higher rates if inflation does not cool down. The 30-year Treasury yield hit 5.18% in May, its highest level in nearly 19 years. What does this mean for you? It means mortgages stay expensive, car loans stay expensive, credit card debt stays expensive. The Fed is watching the Iran situation, watching energy prices, watching CPI, and until something breaks in inflation's favor, they are not moving. One potential silver lining, May CPI data drops June 10th. If it surprises to the downside, the conversation changes. I will be watching, dramatically. And now, the stock market, which apparently did not get the memo about the war, inflation, or broken consumer confidence. The S&P 500 just crossed 7,600 for the first time in its history. The Dow hit 51,000, record highs. While everything else I just described to you is also happening. Suspicious? Yes. Inexplicable? Let me explain. One word: artificial intelligence. The Nasdaq climbed over 8% in May alone. The technology sector, up nearly 20% for the month. Meanwhile, 8 out of 11 S&P sectors actually fell in May. Energy down 5.5%, utilities down 5%. What this tells us is that the record high market is really a very narrow rally. A few enormous AI companies are pulling the entire index up, while the rest of the economy sits in the corner, sad. Alphabet, Google's parent, actually dropped 4% because they announced they would raise $80 billion by selling stock to fund AI. $80 billion. Berkshire Hathaway alone put in $10 billion of that, and the SpaceX IPO is reportedly coming, which is sending AI and tech investor excitement into orbit. Literally. Here is my honest take, and I am a dog, so take this as you will. The market is betting everything on AI delivering enormous returns fast enough to justify these valuations. If AI revenues do not materialize at the scale implied by these stock prices, the correction will be significant. Energy, geopolitics, and a frozen Fed are all headwinds that the market is currently choosing to ignore. I am not saying sell everything. I am saying know what you own and know why you own it. So, to summarize your week, we have an active military conflict in the Middle East that is keeping a geopolitical risk premium on oil, and therefore on everything else. We have inflation that is moving in the wrong direction, a Fed that is frozen, and a consumer that has never been more pessimistic in recorded history. And we have a stock market that is partying like none of that is happening, propped up almost entirely by AI enthusiasm. What do I recommend? Diversify. Watch the June 10th CPI number. Watch oil. Watch any news out of the Middle East. And subscribe to this channel. Because apparently someone has to explain all of this. And that someone is a Maltipoo. I'm Theo. This has been your briefing. I'll see you next week. Try to stay solvent.